chat function as we go along, or just wait until the end, and then we'll see if we can cover them all. So, just a little bit about the survey before we start. As most of you know, we produce an annual salary guide which shows typical salaries paid across a whole selection of industries and functional areas. Then we cross-reference that for level of experience and type of company that role could be found in. The salaries are based on what we see every day in the roles that we fill and from the candidates that we meet. It's become really an invaluable reference tool for literally thousands of hiring managers as we get literally thousands of requests for copies across the country. We're really proud of its simplicity and user-friendliness. So if you haven't actually received a copy of the 2014 guide yet, you can go to hayes.ca and you can easily request a copy there. So then, in addition to the guide, we also survey our clients about their hiring plans, salary changes that they're planning, what they think or how they're feeling about business activity levels and forecasting that, and their confidence in the economy. So this year the survey was completed by over 3,000 hiring managers, HR professionals and leaders across the country, and it's across a whole range of industries. And this year, for the first time, we've been able to include 3 years of data to show trends in the job market, which puts us into a position to see things that others can't, and it really allows us to be able to provide very valuable advice and recommendations to our clients, which is great. Today's webinar is obviously just about the mining industry, so we've pulled out the responses from 400 hiring managers or HR managers and leaders working in mining companies and service providers in the industry across Canada. So I just wanted to set a little bit of context on what's going on in the job market. So I just wanted to start out here with the skills shortage. Salary levels, like any other monetary market, are really driven by supply and demand. So the skills shortage is the essential influencer on salary levels. Most employers are seeing the skills shortage as having an influence. 47% are seeing a moderate shortage of skills, while 21% are seeing significant to extreme shortages. The majority of you believe that that's been driven by 2 key factors. Firstly, there are simply too few people entering the industry. That brings up the question of how to make the mining industry more attractive to young people, and also not just to men. And then you add to that the cyclical nature of the industry, which means that the downturn in 1 year can cause a skill shortage 5 years later, and that's all being compounded by the number of people retiring, and then you've got a real gap of intermediate to senior level people. Another element of the lack of people entering the mining job market in Canada is to do with challenges in bringing in people from overseas. So there are candidates from other countries with suitable qualifications and communication skills, but a lot of our clients tell us that they still see the LMO process as being too onerous or too lengthy. And you add into that the sense of responsibility that there is with the idea of bringing someone and their family all the way around the world for a job, and some companies seem to lose their appetite at that point. We believe that there is an element here of some employers perhaps not trying hard enough to make the international recruitment happen at times, and where we see companies that have pushed ahead and have had success in proactively hiring from overseas, their confidence in the process and in the quality of the people they can get increases, and they go back and do it again. Those who've never got involved in proactive international recruitment would just continue to approach it in a somewhat apprehensive way. So secondly, you've got almost as many people thinking that the skill shortage is being driven by a lack of training and professional development within the industry. There are a lot of training and professional development courses available out there, but we believe that the question is more to do with whether employers are actively investing in having their future star employees take part in courses that would move that person forward in their professional development. Are employers embracing new technologies that would advance their companies, and are they investing in having their people getting educated in those skills? The other thought, which we'll come back to later on, is about career progression. Is there a culture in mining organizations, in mining companies, of talking to mid-level employees about their own personal career plan, or is the attitude really to have someone simply carry on in their current role indefinitely and offer progression only when someone retires? In any event, the short version here is that there is indeed a skills shortage, as we all know, and one which would appear to be set to potentially get worse in the coming years, and employers really will have to have a plan on how they're going to deal with it. As I mentioned, we've been surveying our clients on the same question for 3 years now, so we can share what the trends in the recruitment marketplace, specifically for mining, look like. I'll start out with the headlines of what we can see happening. There's an obvious trend towards an increasingly cautious outlook amongst business leaders in the mining sector. Business activity and hiring levels have fallen short of forecasts over the last few years, and increases in salary levels have been slowing down rapidly. So let me talk you through each of these points, and I'll start with the economy in general. This slide is actually showing what the general population of survey respondents said about how they feel about the confidence in the economy across all industry sectors. And I wanted to start with this so I can contrast it with what people in the mining industry think, because there's a significant difference. So we asked what people's views of the general economy for the next 12 months was. Would it be static, strengthening, or weakening? And the outlook for the Canadian economy for the coming 12 months seems to be quite positive. So for 3 years, we've seen the number of people who believe things will weaken drop from 20% down to around 5%. 40% of people said that the economy was strengthening, and that's the highest in 3 years. And there's been a levelling off or a slight decrease in the proportion of people who see things as remaining the same. I think that when that changes to a majority seeing it as improving, I think we'll see a significant change across the board on the economy. So why is there an increase in confidence in the market? And I think it's to some extent obvious, but and the first thing is, like, the reality for a lot of business leaders over the last couple of years has been that the conditions have been really, that can be best described as being good. Maybe not great or excellent, depending on the kind of work that you do or the industry that you're in, or maybe where you're based. But overall, the conditions have been good. And really, there's no substitute for the reality of a few decent years to start to build confidence. Secondly, things are getting better in the US and Europe, and I think just from a personal point of view, I'd say I feel more confident that 2014 would see improved economic conditions than in previous years because of the news coming from around the world. And then you add on to that Canada's stable economic performance over the last few years has been reassuring. Add in a bit of a global upturn and you've got quite an optimistic outlook for most people. So then, if we pull out the people from the mining industry specifically on the same question, we get a different picture. You've got more people seeing the economy as remaining the same and less people seeing it as strengthening. A large majority, 60%, see things as remaining static, compared with the 50% we just saw for the general population. And why would that be? I think if you're in the mining industry, somewhat encouraging news from around the world is really tempered with your own reality. And the last couple of years have been challenging, to say the least, and that's caused a lot less people in the mining sector to feel the economy will strengthen in 2014 compared to the general population. So overall, a more conservative outlook on things from the mining people. How about what people are seeing in their own organizations? So each year we ask people about expectation of business activity for the coming year and whether it's going to increase, decrease, or stay the same. And then we also ask them what happened in the year just gone, so we can now compare their expectations for a year with what actually happened, which is quite interesting. So there's a couple of interesting trends to highlight here. There's a clear reduction in business activity levels. So over 70% of companies reported increases in business activity in 2011. That dropped down to 50% in 2012 and down to below 30% in 2013. And more significantly, the change in conditions were really quite a surprise to a lot of people. So in 2012, 60% expected increases in business activity levels and 50% actually saw one. So that wasn't too bad. The prediction and the reality were pretty close. But you contrast that then with 2013, where again, around 60% expecting business activity levels to increase, but only 30% actually saw one. Then you've got a corresponding number of companies seeing business activity levels decreasing each year, with over 40% reporting exactly that in 2013. And why is this? Well, you most likely don't need me to tell you, but the obvious contributing factors are, commodity price decreases. They're driven by a lack of demand from the large industrialized countries, or in particular China. That's knocked on a lack of investment, especially at the junior end of the market, and ultimately we're seeing organizations writing down assets and balance sheets, which puts the entire industry into a state of a lack of confidence is probably the best way of putting it. So let's hope then that the expectations here that we can see for 2014 is closer to reality, and we don't have as much of a surprise this year. So what effect is that having on hiring plans? We asked what the intention was on managing permanent headcount each year, and we've put that alongside with what actually happened in retrospect for each year. We've also put in the 2014 expectations. In 2012, 55% of employers expecting to increase headcount, slightly less than actually did, so there was quite a good prediction in 2012. But then in 2013, just over 40% predicting to increase headcount, and around 25% actually did, so quite a large change there. An interesting point on this slide is the major increase in the number of companies holding their headcount steady. And in light of the drop in business activity levels, there's a major difference between the number of companies who are expecting business activity levels to drop or have seen it drop, and then the number of companies who are actually holding their headcount steady. So that would clearly mean companies doing their very best to hold on to their people, knowing that the next upturn would be literally just a matter of time away. We see our clients, from the work that we do really over the last 12 months, doing a lot to try and hold on to their best people. So a lot of work being done to redeploy people into different roles, reducing production levels and reducing overtime, as well as hiring only to replace people rather than to grow. And looking forward, more companies are hoping to keep their people, but if the business activity doesn't come back online, there really is only so long that you could probably do that for. And how is all of this affecting salary levels? We ask each year how much salaries were increased by in the previous year, and we've shown this from 2011 along with the plans for 2014. And overall, the trend here is for less salary increases. But having said that, there were some salaries that were actually increased that we could see. You can't see it on the graph, obviously, but from the work that we do, we could see. So if you took something like engineering roles, and the view that engineers are able to save money for organizations through adding improved efficiencies, better planning. The other area that we've seen increase have continued to happen is with skilled trades, mainly because of competition from other industries. So if you took heavy-duty mechanics or maintenance mechanics, you're getting competition from other industries that are still healthy and growing, like forestry or oil and gas, and that demand has started to push those salaries up, or continued to push those salaries up. But overall, there's a clear movement of more companies offering increases below the 3% mark, and a reduction in companies offering over the 3% mark. And that's obviously all a result of what we've seen in the previous slides. A drop in business activity levels, not actively trying to increase headcount, holding on to existing staff, all making for a far more conservative approach to salary reviews than we were seeing just 1 year ago. So how does the recruitment market for mining professionals look for 2014? So I'll start with the outlook for business as a little bit of context. So as I previously mentioned, perhaps optimistic 45% hoping to see business activity levels increase, and 40% of people saying it will remain the same. I've just taken the liberty to take a piece of information from our global mining salary guide that we released a few months ago about where that focus for increased business activity will come from outside of your domestic market. And clearly the priority for international or global producers outside of their domestic market is in South America, followed by Africa and Asia. And that's been driven by the fact that these markets are seen as very attractive due to the costs involved of extraction, production and capital equipment. But it could also help alleviate the skill shortage that someone would experience in their domestic market for some roles at least, and there may be more availability of skilled candidates in different locations. What can we expect on hiring this year? We asked about staff levels, whether the plan was to increase, decrease or keep it the same. 51% are planning on staying the same, and the remaining half split evenly between increase and decrease. So when you think that 45% were expecting business activity to increase, you've got a 20-point difference there of companies hoping to improve their productivity. We asked a similar question in the global survey. There's some differences here. For example, almost 32% of employers expecting to hold staff levels steady compared to 51% in Canada. Just as a side point here, how employers are going to keep their staff engaged while trying to increase business activity would be a really critical part of their retention strategy, and as the market improves, it will become even more important. We asked what employers felt would be the biggest challenge facing their recruitment plans in 2014, and almost 50% see that fundamental skill shortage as being the real challenge, which makes a lot of sense, and then 20% seeing the lack of new people entering the market as the challenge. An interesting point here is that significant numbers, around 20% of employers, are starting to think about how to attract candidates. So do we have the appropriate level of resource internally? Do we have the right company reputation or the right profile in the marketplace? So we can see here, despite the fact that there's been a cooling off in the market, you've still got companies seeing recruitment as a challenge, and are starting to think about it not just from the perspective of there being simply too few people out there, but from the perspective of how competitive they are in the market when it comes to attracting new people. Another interesting point here, and something I've taken from our global survey, we asked what were the main concerns in doing business in geographical regions, and we've compared those across the geographical regions, so you can see the differing pressures the companies are under depending on where they're based. I won't talk all the way through this slide, but a couple of things. Economic stability is a concern, and that's standard regardless of where you are, but concerns over the skill shortage is obviously felt the most in North America. And that might point towards expanding your business in other regions, as we just saw a lot of companies are obviously doing, but there could be something in that to start looking for skilled candidates from other countries where the shortages are not so acute. We get asked every year which roles or skill sets are going to be the most in demand, and then what effect that's going to have on salaries in those areas. So, as I've kind of alluded to already, positions most in demand would be skilled trades, so anything from heavy-duty mechanics, electricians, millwrights, engineering roles across the board really, so mining engineers, mechanical engineers, electrical, process engineers, and some of the science-based roles like metallurgists and environmental scientists. A lot of the demand for those specific roles, particularly for the engineering, is being driven by just a demand for increased efficiency. So if you can actively contribute to the bottom line and realize monetary savings and cost efficiencies, then as an individual you can expect to be in demand and you can expect to see more healthy salary increases. Our view would be to expect to see salaries for the roles that we've mentioned here to increase by 5 to 10% this year compared to less than 3% for most other roles. Specifically, how do the plans for salary changes look for 2014? Well, 57% are planning on making changes of less than 3%, and as we've seen, the trend has been towards more and more companies offering less than 3%. But then you've got still a fair proportion, 37% in total, planning on offering increases of over 3%. So not all negative news, or it's not like all of the confidence has gone out of the market. There's a fair amount of relocations in the mining industry, so we wanted to pull something out here that might help our clients on when it comes to what to offer when you're talking about relocations. We wanted to find out what was the tipping point in getting someone to seriously consider a relocation. This information was taken from another survey that we had just completed a couple of months ago that was focused on candidates. So we asked candidates, what level of salary increase would you need to consider relocating? And it's quite evenly spread, so I would assume that that depends really on the individual situation or the individual person, or probably the skill set that they have to some extent. But the majority, 56%, would expect an increase of more than 20% to consider upping sticks for a new job. We also get asked by clients what the total package needs to look like, so just sticking with relocation here for a moment, what would have the most influence on whether someone will move or not. So we ask candidates to rate the different elements in terms of importance, and after obviously compensation or salary being the most important, the relocation package itself being offered was of most importance to the candidate, and we hear that regularly ourselves when dealing with candidates every day. That's closely followed by career progression being offered, so being able to highlight what career progression is actually available in more detail could alleviate some of the pressure, at least on salaries, when presenting an offer to relocate. When it comes to non-monetary benefits, we ask questions about what was having the biggest impact on recruitment and retention, and also what your plans were for the next year. And just wanted to share this with you to help you build compelling offers. So we asked how much of an impact a selection of benefits have on recruitment and retention, and the top two were career growth and vacation time. And career growth actually one that's really increased in importance level over the last few years, and we think that's really got to do with people's appetite for progression increasing as the recovery started to take place. In any event, the top two were vacation and career progression, and then others that are topical, such as work from home or flexible work hours, were being seen as having more of a neutral impact, which is interesting. We also asked which benefits employers wanted to add to the package, and flexible work options like flexi hours came out on top, followed by performance-related bonuses and RSP matching. So a combination there of work-life balance and two more closely related to monetary compensation. I just wanted to make a quick point on that topic about the impact that certain benefits have versus the plans to add certain benefits. So we conducted a survey, as I mentioned there, of candidates or professional skill candidates and how they evaluate a job offer from an employer and how they rate the component parts. The report is called What People Want. You can request a copy from hayes.ca too if you like. It's really good stuff. It's quite insightful. But anyway, we asked people to rate different elements of benefits in order of importance in this survey, and vacation time came out as clearly more important than flexible work options. And the point we made in that document was just to consider the impact that focusing on increased time off would have over flexible work options, and the effect that would have on people's feelings on when it came to how they felt about their own work-life balance. And then finally, just one other pointer to share on this topic. So just looking at that graph again about benefits that impact recruitment and retention. Career growth is clearly very, very important to people, and employers are aware of the impact that can have on recruitment and retention. So we asked whether they had a succession plan in place, and it turns out that the majority actually do not. And that's got to be a big opportunity for companies to be able to affect change in their organization without adding any kind of additional cost. From what we can see, companies in the mining industry they're not nearly as proactive in talking to their mid-level people about career plans and professional development as perhaps they are in some other industries. And just to think for a moment about the impact you could have on recruitment and retention if you could actually physically hold your succession plan in your hand and show people what the plan is for the next 5 to 10 years, where they could fit in and what they need to do to make sure that actually happens. And finally, we just wanted to leave you with a few recommendations from us on how to, when it's coming to putting together your offers and how to stay competitive in the marketplace. We just want to leave you with a couple of recommendations on compensation and benefits. So the first one is a uniform increase of salaries might not actually respond to the level of shortage for certain roles. It could be too much for some roles and it could be too little for other roles. So think about which roles are actually the most in demand or hard to find and respond accordingly. So think about people in your organization that have these skill sets and then review their salary in a different context. If the hopes for the economy in general come through, and this really is the year that there's a global turnaround, we could be in store for a return to growth for companies in the mining sector, and I hope we are. If that actually happens, there will be a trend back towards salary increases over 3% in general. And moving with that, it's essential to stay competitive, but there is a note of caution, and that would be that only one company is paying the most, or in other words, there's always someone who's paying more, so don't compete on salary alone. There is an appetite amongst employees to trade salary for other things, so performance-related bonuses, vacation time, new challenges, so perhaps try something different and see what kind of impact it has. Finally, think about what makes your offer different and whether that actually appeals to the target market. Play the cards that most appeal to the people that you want to attract. So for example, how about creating your company's succession plan and sharing it with the team and with prospective employees to show where the gaps are or where the gaps are going to be and what the opportunities are. How about talking about professional development with future stars as opposed to just about when the next promotion is. So that concludes the presentation of the results. I think we're almost exactly on time, a couple of minutes over. So thank you very, very much for listening. Thanks for dialing in. And we'll just have a quick look to see if we've had any questions. Just give it a second. Right, so we've got the standard question of where can we get a copy of the slides for the presentation. So as soon as we're finished here, we're going to upload the slides and the audio from the webinar onto hayes.ca. So if you want to look at it again, if you want to share it with anybody, you can just go there and go back through it at your leisure. If you have any specific requests for information on breakdowns that we haven't given, then we're happy to do that. So you can contact our marketing department at marketing@hayes.ca, or you can email me directly. It's rowan.o'grady with no apostrophe at hayes.ca. Okay, it would appear that we've completely answered all potential questions in the presentation of the seminar, so that's good news. We must have done a good job. So thank you very, very much for dialing in again. Oh, hang on, somebody's come in at the last moment with a question. So, what percentage of companies are flexible at the offer stage when it comes to vacation time? We, for example, are not, and it is a tough deal breaker. And that's actually a brilliant point. We asked a question in the What People Want guide, which whoever asked that question should go and have a look at it. And we tried to say, if you were to take a reduction in different elements of your package, which things would you be prepared to take a reduction in to get the ideal job? And the one area that people were the least willing to take a reduction in was vacation time. So when it comes to a job offer, if somebody's got their perfect job offer and they're currently on 4 weeks vacation and they're offered 3 weeks, in our experience, it's very, very rare that person will take that offer. So from a retention point of view, it's a very good thing to think about, to say, what can we do with our vacation time? And when you're offering somebody, you know, you're kind of stuck to some extent. If your standard is everybody's on 3 weeks and the person's looking for 4, how do you deal with that? So my advice on that is, I don't think you can just offer people whatever vacation you want at the offer stage, because you'll obviously cause problems internally. And I think it's more of a holistic thing, and perhaps to start with it from a retention perspective, to say, what could we do here on vacation time? Could we make it increase significantly? And if you can, then that allows you to then be able to offer that when you're bringing in new employees. But yeah, I think the prospect of making being very flexible for new people is only going to end in tears. Another question here. The questions are starting now. So how beneficial is an MBA in the mining industry? And I think if Keris is on, if Keris, you could unmute your mic there and you can hopefully answer that. How beneficial is an MBA for a candidate in the mining industry?
Thanks, Rowan. An MBA can be useful in certain areas of the mining industry. I think predominantly in corporate roles, either with a focus on business development, optimization, finance, and those kind of areas, then it would be seen as very beneficial. Certain other areas, not so useful. So it really does depend on which area of the business that the candidate is focusing on.
I think that largely goes for almost every industry, doesn't it? So there's another question that's come through. How are people dealing with, and also that must be how are employers dealing with the aging workforce in a physically demanding industry? And I think I'll probably give that one to you again, Keris, because you probably know the answer to that.
I know, and it is a big issue, and I hear that quite a lot from people, and I think that, that there's a certain amount of automation that's obviously come into the industry over the past 5, 10, 15 years, which does help with some of the physically demanding side of positions. But we are finding that, you know, that is becoming an issue, and certainly a lot of employers, when asking us to fill certain positions for them, you know, are obviously looking for a level of physical capability. And, you know, a lot of employers will obviously do medical checks on candidates coming into roles that do have a physical element to them. So it is an issue, and I think, you know, employers are obviously looking to hire people that have physical capabilities, and the aging population, you know, where the automation isn't available, is finding that quite difficult. So there's going to be a lot of competition for, you know, the younger generation of workers coming up through the businesses now.
And another question for you, Keris. Are there any success stories out there of companies that we know who are attracting women into the industry? And the person who's asked this question is saying, we're still at 15% female. So are there any good stories out there of companies who obviously, maybe they haven't cracked it, but they have had some success.
Great question, and one very close to my heart. I'm actually part of the BC Mining HR Task Force with a focus on diversity, specifically looking at women. So this is a topic very close to my heart. There are some great stories actually, and there are a number of organisations that have taken their intake of female employees to over and above that 15-16%, which is the national industry average for female. Tech tend to do quite a good job of this, and they've got a number of initiatives in place. Suncor, again, another company that are doing quite a lot in this area. Goldcorp and New Gold, another couple of companies that we've seen, creating some great initiatives. There's a lot of discourse on this area, and certainly there's some information that I'd be happy to share with people, specifically if they want to find out more about that and where to find more information. There's a number of reports that I've got access to, which I'd be more than happy to share on that. I'm also helping to run some of the technical sessions at the CIM 2014 conference with a big focus on diversity, and a number of speakers I have lined up for that will be very much talking on this issue and looking at it from the shop floor level to getting more women involved in trades, right the way through to building that message at a senior corporate executive level within organisations. So there's a lot of discourse on this at the moment, and I think it's starting to make headway, and there are some individual companies that are having individual successes. Yeah.
Like if you were to pick one key thing that these companies are doing that maybe other companies aren't, is it possible to narrow it down to say, like, the key to this is this? Like, is there a starting point or something that other companies should consider?
To be honest, there's no easy answer to that question, Rowan. I think ultimately there needs to be a mix of approaches to being able to attract and retain females within the mining industry. There needs to be, at grassroots level, a desire to present the industry as one that is female-friendly, and that is a challenge with certain positions in certain locations. But there needs to be, at that kind of grassroots level, the desire for the industry to be able to present that as a viable option, and that could be anything from flexible working through to just kind of changing how the lavatories are arranged. For example, it's really quite basic, but at the same time, it's very much focused on education as well, and catching those students at kind of grade 5 upwards, really, to get excited about the mining industry, right the way through to really kind of advocating it from a senior executive level. If the CEOs, the chairman, the presidents, the COOs were all very much on board with this, then it's much easier to have that top-down message, and get the management involved in promoting it as something that's pretty normal now.
Right, okay. So it's almost, the first step is like a commitment to making it happen.
Yeah.
Okay, excellent. Okay, I haven't had any other questions come in the meantime, so we're probably done. I'm guessing if there's anything else you want, like I said, just email us and we're happy to help and talk. But that's the end of the webinar. Thank you very, very much for dialing in, and thank you very much for your time.